Welcome to Bulls, Bears, and Bill, a weekly Dalton Community television program on the financial markets, brought to you by Bill Schmick, founder of Onota Partners, and me, Rachel Branch, co-host. And when Bill says financial markets, he means all of them. On each program, we will continue to share with you, our audience, why the markets did what they did and where they are going in the weeks and months ahead. Bill writes 2 columns weekly for several media and newspaper organizations throughout the country. The substance of Bulls, Bears, and Bill.
Thank you, Rachel, and welcome back, viewers. I hope you had a long Labor Day weekend. We did, and today's Monday. When I left, the markets were up minimally, and the weekend was sort of quiet. We didn't get very much out of the White House, at least when it comes to economics and finance. So here we are in September, and September through October, about middle of the month, October, that's supposed to be historically your most difficult months in the stock market. To date, when I'm looking at September, the markets have been making minor new highs, but they have been choppy, and I expect that to continue into this week because we have some very important data coming out on Wednesday and Thursday.
So here's our first question. Will Trump's tariffs be overturned by the courts? And if so, what happens to the markets?
Well, I'll give you 50-50 odds on whether or not the Supreme Court is going to come down in favor of the president or not. No one really knows. We all know that there are a number of Supreme Court justices that have been appointed by Donald Trump or other Republicans. But at the end, they've also come down on a number of his decisions and agreed with him. And here's another one. On the other hand, the Supreme Court is a bit touchy when it comes to separation of powers. In the past, they've basically come down on a clean delineation between Congress, the president, and the courts. And in this particular case, with using the International Emergency Act, declaring an emergency and therefore justifications for levying the reciprocal tariffs in the first place, the International Settlement Court came out when they said, no, you can't do that. And they specifically addressed the separation of powers by stating in their decision that it's Congress that has the power of the purse and the power to levy taxes and tariffs. So this is coming into the Supreme Court. Even giving it 50-50, I have a sense, listening to the news and what the U.S. Treasury Secretary Scott Bessent said, and even the president has said, they're giving it 50-50 odds themselves. They're not at all sure. And today, Monday, Scott Bessent, the Treasury Secretary, actually came out and said that if the Supreme Court weighs against the Trump tariffs, then he said half of the money collected from the tariffs will have to be returned from the Treasury, and what that will do to the deficit or not. Now, here's the point. If all of those tariffs and all those payments that we've accrued so far, which is supposedly going to reduce the deficit, those tariffs are been paid for by Americans, either American corporations, as I've said in the past, or Americans through higher prices. So returning half of the tariffs, what does that mean? That means that companies like GM that already announced they paid $1 billion plus in tariffs would get it back. And instead of spending $5 billion this year in tariff cost, GM would have a return. That money would return, and that'd be great for profitability. It would be great for other companies too that have been paying taxes, and for consumers as well. Now, what is the downside? Well, the downside is that the deficit, which is out of control, would turn around and reverse and go back up. And what would that mean? Well, here we go. Here's the situation. I hope you know and understand that tariffs are taxes. So on the one hand, we had this great big beautiful bill in which the president didn't reduce taxes, just didn't raise taxes, okay? And that is supposed to be your tax bill, that you actually got a tax cut. That's not true. None of us got a tax cut except in certain instances. Most of us just didn't pay any more taxes. However, the tariff is a tax, and the tariffs that are being implemented, instead of an income tax increase, now we have a tariff tax increase, but it's still a tax. What happens if you reverse that? What if there's no more tariffs? Therefore, the government's got in a bind, right? Because the only way you're going to reduce their deficit is to cut spending or call a spade and raise taxes.
Why would only half the tariffs have to be paid back? I'm adding a question.
Well, that's because there was a across the board, all nations tax of 10%. But the president did not use the Emergency Act in order to levy that tax. And there are also tax tariff. There are also some tariffs on things like aluminum, steel, and copper. Again, that he didn't use the emergency clause to do that. So those taxes, those tariffs, they were done through traditional means, and so they'll still remain. So roughly, as he said, Besant, half of that would have to be returned. And of course, the president has said, if this happens, we'll go into a depression. And of course, he's already blaming the courts for the decision. And as I wrote in a column on this last week, when Treasury Secretary Besant said this would be a real embarrassment to the United States, all I see is it's a real embarrassment to the administration. They didn't have to do what they did. They didn't have to circumspect Congress, go around Congress. They could have gone through Congress, and that's the traditional way of levying taxes. They took a shortcut. And it seems that the courts are saying, no deal. So what embarrassment do I see? An embarrassment of the administration, not the country.
Wow, here we go. Probably intertwined. The employment data for August was weak. That was 3 months in a row.
Yes.
Is that a big concern?
Well, Wall Street is worried about it. The market was down on Friday due to the non-farm payroll announcement that, once again, I think the economists were looking for something like 75,000 jobs gained in the month of August, which is not great at all, but 75 is 75, and it came in at 22,000 jobs gained. And if you look back over the last 3 months, add all of them together, it's basically the whole nation only gained 8,000 new jobs. That's a paltry amount. Yeah. So, of course, Wall Street is now worrying, oh my God, what's happening? Is growth slowing? Is employment, sort of like the leading edge, the loss of jobs to a slowdown in the economy, yada, yada, yada. And it's a concern. And I said, I think, in our last meeting, that we should be watching the non-farm payrolls data. And I had said at the time, I thought that the non-farm payroll, the job losses would continue. And of course they now have. So what does this really mean to me? I don't think the slowdown in the economy is anywhere near something that we should be worried about at the moment. What I see, and what I had been writing for the last, well, since the last administration, was from the COVID pandemic up until now, the job growth in the United States was largely through immigration. That is where there were job gains. Now, a new administration comes in, a new immigration policy comes in, successful, dropped illegal immigration to zero, basically nobody's crossing the border, and now we're going after supposedly illegal immigrants, but immigrants overall. And what that did...
And Americans.
Yes. Some Americans too. So what's happened is the job growth that we had through immigration has fallen off the cliff. And that's what's going on with the unemployment numbers. The losses are due to the Trump policies and your policies. Because remember, for the most part, the majority of Americans during the last election, both Democrat and Republican and independents, one of the major issues with you has been stopping immigration. All right, that's what this administration has done. They've stopped immigration. You live with the results, and this is the result.
And it's not all of us.
No, of course.
Of course not.
The minority of Americans recognize this. I'll count myself as one of those minorities. I think that immigration is absolutely the lifeblood of this country. But this isn't a political show.
Oh, really?
No.
Okay. The latest consumer price index comes out this week. When it does, what will your opinion on inflation be?
Well, along with the non-farm payroll prediction that I made 2 weeks ago that it would be what it was, I'm expecting both the producer price index, which is sort of the prices that businesses pay for materials and products and so forth, and the consumer price index. The PPI is due on Wednesday. The last PPI was what we call a hotter inflation number, an upside surprise. Normally, 1 month to 2 months later, those producer price index prices start to show up in the consumer price index. So I'm expecting the CPI that comes out on Thursday to be warmer, hotter than it was the last month. And I'm actually predicting that we will see higher inflation numbers, not enormous, but a trend higher through September, October, November, December, until by December you'll be seeing a consumer price index above 3%. Now, what is that going to do to the markets? Well, that brings us to a different issue, which is the Federal Reserve. On September the 14th, yes, I think it's the 14th, the Federal Open Market Committee meets again. The guess or the anticipation is that at that meeting, the Fed is going to cut 25 basis points, 0.25%. And there's over a 90% probability in the markets now that they will make that cut, regardless of what the CPI or the PPI give us on Wednesday and Thursday. That's sort of set in the cards. What's questionable is if those two indexes, the inflation indexes, are hotter than expected, will that be a one and done? Meaning the Fed will increase once and then be done and wait until the data reveal whether they should or should not cut again? Or as the market is thinking right now and betting that we will have three cuts: September, another one in October, and another one in December. Now, in the face of rising inflation, why would the Fed cut? Well, on the other side, as you saw, the non-farm payroll numbers were weak, and I think they'll be weak again because, as I said, immigration is through the floor. If that was where all the jobs were, gains, and that's no longer there, well, what will happen to the employment rate? You're not going to see jobs. So you're going to see the unemployment rate go down, and go up in the next couple of months. You're going to see inflation go up at the same time in the next couple of months. And the Fed is going to be tussling between two issues. Do we cut rates after this September cut because unemployment is rising? Or do we worry about the other side, the inflation rate rising, and hold off? That's the conundrum. That's the difference. Do we take jobs or inflation? Jobs or inflation? And well, it remains to be seen. If it were me, if the Fed falls into the fallacy that they've got to continue to cut rates through the end of the year, three cuts through the end of the year, because unemployment is rising, when I've just told you why, I think that's a major mistake, because I'm convinced that inflation is going to continue to rise. And all that's going to do for you and I is increase the price of meat, eggs, gas, you name it.
They're already going up, aren't they, Bill?
They have been.
Yeah.
And they're and you're going to see, I believe, the CPI again this week is going to tell you they're still going up. And next month's CPI is going to say they're going up again and again. Now, if the Fed cuts interest rates each month, all that will do is feed into that inflation number, and you'll be paying higher and higher and higher cost for the things that we consume. We'll see what happens.
It's very interesting, the work that you do. How do you keep all this together as it's all intertwined?
Oh, I'm glad that you said that. It
Yeah,
is all intertwined. It is. It is. You can't just look at the stock market and what IBM or NVIDIA or Microsoft earned and think that that's the nature of the beast. It's far more complicated than that.
Yeah, it is. And normally September is not a great month for the markets. Are you still cautious?
Yes.
And will you continue to be?
Yes, I am this week and next because of the inflation data, and then the actual FOMC meeting the week after. These 2 weeks could be minefields for the market. Markets are continuing to make record high after record high. Everyone knows they're extended, overbought, and yet the market's still going up. Now, I think that the non-farm payroll number on Friday was a shock. Markets went down. They're not roaring back either today. And if we do get warmer numbers in CPI and PPI, what I think will happen when the markets will say, oh boy, maybe we won't get those cuts. Mm-hmm. Maybe we'll get the September cut, but about another one in October and another one in December with those kind of numbers. Well, the market right now is expecting 3 cuts. If those inflation numbers this week come out and they put a dent in those expectations, I think the market will reflect that, and we could see a pullback in the market. Next week, with the FOMC meeting, if Jerome Powell comes out with the expected cut, but makes it clear what they call that it's a hawkish cut, meaning one and done. Okay, we're going to cut here in September. We recognize that unemployment is rising, but so we'll cut as insurance, but we're going to then maintain and see what the numbers say. That's a hawkish cut. If that's what he says, I think the market is going to be quite disappointed with that. If, on the other hand, he basically says, oh, we're cutting in September, and if things continue the way they are, we're probably going to cut more this year. That would be what markets are looking for. Okay? And if that were to occur, I think the markets would rally a little more. So it's up in the air what happens. And so, given that markets are as high as they are, hitting record highs, I'm waving a yellow flag and saying, okay, I would continue to hold what I own, but I'm not adding to it. Okay, I'm not adding to it. And if I were a short-term sort of trader, I would be watching my back here. I would be more cautious than not. So there are some assets that are going up. I mean, it's incredible what's happening in the gold and silver markets. They're reaching new highs. They're outperforming everything. Another market that you probably don't hear very much about, except negatives, the best performing market over the last 2 years has been the Chinese market. In fact, so far, it appears that not only have the Chinese outsmarted Donald Trump, okay, their strategy is to continue to talk but do nothing. And at the same time, our country, our politicians, even though they've been bashing China for 2 or 3 years, they're starting to realize that we can't get along without certain products that they only produce. Strategic metals is just one example of this. So, yeah, the Chinese market has been the best performing market in the last 2 years, and it's still on a run higher. So that's a market that shines. And I mean, we're doing okay too. We're making historical highs, but their market is just flying. So,
If it would be all right with you, I'd just like to add one question for clarification. The Federal Reserve Board and the relationship between central banks, because I didn't really understand. They're connected.
yes.
Is that okay if I ask
Oh,
a
that's
question?
fine. Yes.
Yeah.
The Federal Reserve, the Federal Open Market Committee is a meeting where the governors of the Federal Reserve Bank, they are all members of the Federal Reserve Bank, and there's 12 members in the board, and they meet not every month, but most months to decide whether the monetary policy of our central bank is appropriate. That, if that answers your question.
There's more than one central bank, though, aren't there?
Oh,
Central
yes.
banks across the
There-
country. Like there's
No,
one.
no, there are central bank governors across the country.
Oh, okay.
So think of it this way: the central bank is based in Washington D.C., but in many of the cities there are offices, federal bank
okay.
offices.
Like Chicago and San Francisco.
Yes, and each one has a governor who manages their region.
Oh,
Okay. So, and then they all meet, they talk about what's happening in the West Coast or Chicago or wherever. And they trade information. Yeah, we're doing all right factory wise, but, our agricultural areas, for example, in the Midwest, may be sucking wind because of the tariffs. So that input is vital to making the ultimate decision by the Federal Open Market Committee meeting, of which 6 members of the 12 vote. Okay, and they alternate. I mean, over time. So one of the things that are occurring now, as viewers know, is that there's a big push by the administration to, I guess, what you would call pack the voting members of the board. As it stands now, you could count that 2 of the members voting members were appointed by Donald Trump in his first administration. A third member, just last week, Stephen Moran, he is the president's chair of the Economic Council. And so he works for the president. He's taking a 6-month leave of absence from his job at the White House in order to join the board of the Federal Reserve.
Sure sounds like a conflict of interest to me.
Well, it sure does to me either. And anyway, he just went through the Senate's Banking Committee, who met, I think it was last Thursday. And even though he's got a foot in the door in the White House and wants a foot in the door in the Federal Reserve, the Republicans basically blessed that. And so we could expect his nomination shortly. Whether or not it will happen before the September meeting is questionable. We don't know, but it could. If so, that would mean there are 3 out of the 6 members of the board that were appointed by him. And then there's a 4th, okay, that we don't know who it will be, but that person, which will that will happen at the end of the year, it will be a Trump appointee. That would mean that you've got 4 members of the board, voting members, that are Trump disciples.
And that's the attack on Governor Lisa Cook.
Yeah, that's
If you're talking
if that occurs.
Well, a woman, and also a woman of color.
Yes.
And I'm really grateful that she is fighting legally.
Yes, whether or not that is going to work,
We don't know.
We have no idea. But I would expect if it doesn't work, then they would come up with something else because they're not through doing this. Now, saying that, even though members, for example, let's say the worst happens for people that are worried about inflation, and now there are 4 members of the board. Well, the chairman still has the ultimate authority. This is not a democracy on the board. So you could have 4 of the 6 members vote for cutting interest rates, and the chairman of the board, Jerome Powell, could just ignore it and say, we're not going to do it. Now, of course, from a political point of view, think about it, okay? You have 4 members of the board, voting board, who say cutting interest rates, and yet the chairman says, no, we're not going to do it. What does that look like politically? There's a lot of political ammunition, and and believe me, the administration would use that. But however, in the past, and I've looked through many, many Federal Reserve boards and chairmen, there have been times where the Federal Reserve chairman has been the whipping boy for administrations with a lot of stress and pressure, and yet they haven't caved in. I think the only Federal Reserve chairman who did sort of cave in was during the Nixon administration, when that Federal Reserve chairman, who worked for the president, like Stephen Moran works for this one, actually agreed to Nixon's demand that they cut interest rates. That was in the early 70s. And of course, if you recall what happened, I mean, we blame OPEC, but by, I think it was 1978, our interest rates were at 20% because inflation was 20-some%. And yes, oil contributed to that rise, but I believe it was that Fed chairman at the time caved in to Richard Nixon because he wanted to be reelected. That's why he did it.
It's hugely important that
Yes.
the Federal Reserve stay independent. Really important.
It is. But again, here now I have to go back to when you and I know this from our discussions. back to this age of populism. And and I've written columns about it, and we've talked about this. Frankly, we're in an age of populism in which a majority of Americans are angry and feel that neither the political or economic system in this country has served them well. When it comes to the Federal Reserve's bank, I would say to you that that these same people that are behind the populist movement could care less whether the Federal Reserve Bank is independent or not. Why? Because for 40 years, what they see is a Federal Reserve Bank that served the rich, not them. And why is that? The question is this: how does the Federal Reserve Bank control the money supply and the economy and inflation? They either cut interest rates or raise interest rates, right? That's their job. That's all they got. So think about this. You're in the Federal Reserve. You decide to cut interest rates as they did over the last 30 or 40 years to zero or close to zero. Let's say down from 5% to 3%. Now, how does that somehow increase the growth in the economy? Well, if you reduce the interest rates, people can borrow at a lower price, right? A lower interest rate, and they can theoretically invest that money in plant and equipment and companies and so forth and so on. And that would grow the economy and grow employment, yada, yada, yada. That's the idea behind it. Here's a question I ask you. Who gets to borrow when the Federal Reserve Bank cuts interest rates? Who? Because they cut interest rates, the Federal Reserve doesn't lend you money. The banks do. Okay? And the banks see their interest rates coming down, so they're going to loan. But who are they going to loan to? Who's got the ability to borrow? Number one, corporations. The larger the corporations, the more they can borrow at the lowest rate that the Federal Reserve Bank cuts. Who's next? The people who own those corporations, the wealthy, the 1%, the 2%. They can borrow, and they do borrow. They don't need to borrow, just like the large corporations don't need to borrow. But what are you going to do when the interest rates are 1 or 2%? It's free. Borrow. When it comes down to you and me, oh, whoa. You want to buy a house? What's your income? What's your color? Now, of course, they don't say that. What's your color? Where do you live? Okay. When it comes down to cutting interest rates, the last people on the totem pole is you and I. So the Federal Reserve cutting of interest rates never get down to us. Okay? The banks loan to people and then the corporations who don't need them. So what's been going on for 40 years is our independent Federal Reserve Bank has been cutting interest rates over and over again. Who borrows? The 1% of corporations try to go and get a loan as a small business owner.
Yeah.
See what you're going to pay versus what Microsoft is going to pay.
Or a homeowner.
Yeah. So here's the bottom line. In the populist era, believe me, they're not going to care whether the Federal Reserve Bank is independent or not because it doesn't serve them. In fact, what Donald Trump is doing, he's demanding that they cut interest rates and keep cutting them until at some point, hopefully, they'll get down to us. I don't think that's going to occur, okay, because he hasn't changed the Federal Reserve yet, and that's the only mechanism that they use in order to stimulate the economy. Now, and this is heresy because I'm a Wall Street guy, okay? I benefited from this, but the heresy is if the Federal Reserve Bank was no longer independent, Is there a way of changing their function in order to serve you and not Jeff Bezos? I don't know. I don't know the answer. I don't know how that would happen. But you see what I'm saying? For the vast majority of people in this country outside of Wall Street, who demands the independence of the Fed because we've made a fortune in the last X number of years from it. Of course we want it independent. But for you out there who the Federal Reserve means nothing at all or very little, I don't think they would care.
I think it's really important that people realize every dollar you spend, where you spend it, is an important in fighting the economics that it's against equality and equity.
Yes. Well,
Every dollar you have to think about where you're spending it. So it's one little thing that everyday people can do. That's my
yes. Yes. And I would like somehow for the Federal Reserve or some way of a mechanism that that we chuck this whole trickle down myth.
I call it trickle drown economics.
Doesn't work. It never worked. It's just lined my pocket with money.
Yeah.
Okay. Is there a way of turning this situation around? I don't know if there is, but I'm willing to listen.
Well, don't you see Tesla going down?
What's that?
Don't you see Tesla
Yes.
going down?
Yeah.
There's the one together across the board.
Yeah.
Everyday people, I think, don't realize the strength of the power that they have. A lot of everyday people.
They don't feel it. They don't feel it.
Not yet.
Right. So, anyway,
On a high note,
yeah.
the more information we have, the better off we are.
Yeah. So
Thank you very much.
You're
Bill
welcome.
Schmick.
Stay tuned for the CPI and the PPI, and very important next week, Federal Reserve. See what they do or they don't do.
And remember to submit questions if you have.
Yes, yes,
to
we
Dalton
forgot that.
Community Television.
Yes, please, anything you want, and we'll answer it. Thanks.